Good afternoon, dear listeners. Welcome to AUGA Group Investor Relations Conference. I'm Paulius from Nasdaq Vilnius, and I'll be moderating today's event. We will start with a presentation from the management, which will be followed by the Q&A session. Please be informed that this webinar is being recorded and will be available for a rewatch on Nasdaq Baltic YouTube channel. As always, I encourage every one of you to share your questions in the Q&A section at the bottom of your screen. And you can submit them either anonymously or with your name. With that said, I'm pleased to introduce today's presenter, the Chief Executive Officer of AUGA Group, Kęstutis Juščius. Kęstutis, please, the floor is yours and good luck.
Good afternoon, ladies and gentlemen. I'm Kęstutis Juščius, I'm CEO of AUGA Group, and today I will make a presentation and make most important events in the AUGA company at the moment will be available for investors. Historically, we reported AUGA Group's results by four main important business segments. This is dairy, crops, mushroom growing, and FMCG. In 2023, in May 2023, we announced that a new AUGA community business model on top of current activities and the company AUGA community umbrella. It consists of three most important branches. First of all, development and production of agricultural technologies, sustainable technologies under company AUGA Technologies, technology sharing and sustainable farming standard via franchise model under company AUGA SOFA, and new category of end consumer products from farms which follow sustainable farming standards under company of AUGA Trade. So far, only new FMCG line has started to generate revenue, so we will continue to present results in the historical way and update on the new business model implementation status. Results for 6 months of 2023. Our revenue grew in 6 months by 20%. But it's mainly because of higher harvest of 2022. We sold in first half of 2023. Also, the increased revenues are related mainly to also higher sales in mushrooms and FMCG consumers products. Profitability decreased due to significant drop in market prices of major organic commodities, wheat and milk, and unfavorable cost of sales, partially coming from selling of crops from harvest of 2022. Let's go through the segments. One of the main important segments is crop growing. What we see here in this segment. So the prices for our main commodities in the second quarter dropped significantly and hit the bottom, but at the moment stabilized. We see here quite substantial still gap between organic and conventional prices, but this gap is decreased. And if we look on this gap, so this looks like sometimes we have 100 and 100 plus euro per ton of grain for the organic and conventional different standards. But these prices are mentioned in Germany. This is, let's say, in the central, the largest consumer in Europe. And we, like Lithuanian company, we need to deliver to the organic consumers, to the German, to the Scandinavia, to Great Britain. It's cost also a lot of transport, and these transport prices sometimes are 30 till 70 euros per ton. And related with excluding the transport prices with 100 euros of price difference, ex-doors difference is actually 30 till 50 euro per ton. And it's not a substantial margin for today's market situation. Lower level of market activity we see in end of 2023 due to decreased consumption for final products in Europe related with peak of inflation last year, and consumers' behaviors to step back from expensive shops, from organic shops to discounting retailers, where much less organic products available. And this is reduced the demand for organic commodities also, and the prices from harvest of 2022 harvest till now, we are step by step decreased every month. And this actually provide a situation that the traders which fixed prices directly after harvest in 2023 too, we had big losses because of market volatility. And for today, we not want to do any long-term contracts or delivering like in 6 or 12 months. We're willing to stay on the spot market, and that's why. And then at the moment, compared with 1 year before, we have contracts for only 6.5 million versus last year on the same period we have 15.6 million. But what we see that at the moment, this is already situation stabilized. The prices, like I said before, they reached bottom, and the market after harvest, we see already market demand grows up a bit, and activity is coming back to not previous levels, but to better and more expected levels. Second quarter, we see a decreased value of biological assets. It's mainly because of significant price falling down in second quarter. And if we see on what we see forecast for third and fourth quarter, we don't see significant price or yield adjustments in third quarter like is we seen previously years, because we already, like I said before, we reached already the bottom of prices, and prices are stabilized. And this year harvest was average, and we don't see big falling down regarding the volumes of sales in third quarter. What we see positive for fourth quarter, that due to our change of our business model, which we explain a little bit later, we increased our winter crops in rotation. It is at least 40% larger area of winter crops will be sown in 2023, and it will generate more revaluation of biological assets in fourth quarter of this year. Financial results of crop growing segment. The decreased price, like I said before, this is the main negative impact on the revaluation of biological assets on the sales. If we'll take first prices of first half, end of the first half of 2022, so our gain on revaluation of our first quarter would be 8.5 million versus 1.5 what we see today. So this is actually a huge impact, and it's mainly correlated not with yield or cost of production, but mainly correlated with prices on the market commodities. Subsidies per hectare this year is a little bit higher because this is change of program of last year. But the group will get new subsidies also for green incentives. So it's this year started new program, which in the subsidies program, which pay for every incentive you provide for the soil, extra subsidies, and these subsidies are with not fixed value, but this value could change related to with applications amounts. And at the moment, it's not easy to judge how big will be this sum, because it's will be related with government institution decisions, how we want to split between these programs. But that's why we took for subsidies last year. Previously, subsidies amount with a little bit increased of the sum which we already know, and these subsidies are based on historical forecasts. Also important to mention that because of due to change in business model, could be a little bit less subsidies for organic farming area, which will be known also in fourth quarter of this year. Then we will know exact amount of soil which we converted from organic to conventional. Results by segment. Dairy. Yield for dairy, or what we can milk from one cow, is stabilized, and we have more or less a similar results. But the prices, which you see on the graph, it's fall down back because of commodity prices drops in first half of the year. The prices are same like in commodities. We also dropped down, and we stabilized at the moment, a little bit increased even last 2 months. And we see is the prices not only because of organic, but it's also partially because of lower consumption of organic raw materials, raw milk. We sold partially milk to the conventional market. And this is also was a very impact on the prices, not only because organic prices decreased so much. Financial results. Decreased prices of raw milk resulted in gross losses versus gross profit of 6 months last year, 1.3 million. The stable milk yield per cow, it still was very related with a little bit decline in volume, because we had a 3% less milking cows for the moment comparing 1 year to year 2022. And what we see in future, so we see the stable production, and we see also stable prices, which are on the bottom side now at the moment, but we are not decreasing at the moment. And we see also in Baltics, especially in Baltics, the competition for the milk will raise, and the situation when we had the lowest prices probably in Lithuania, in Europe, probably one of the lowest prices probably could change, because one big producer opened a processing facility in Estonia, and Lithuanian processors of milk, they imported a lot of milk from Latvia and Estonia. So 1,000 ton of production capacities starting up in Estonia. So it's will create competition in the area, and we expect that the price for local suppliers will be higher. As well as a mushroom growing segment, it's one of our important segments. What we see, first of all, what is good to see is that our costs were contained at only 2% increase per ton, while Lithuanian average half-year inflation hit 13.5%. And of course, it's big impact on this. This is our energy prices, and the gas and electricity price, which you see on the graph, we decreased and to the previously levels of 2021. And we see forecast for next half of the year. We see also that the energy prices will be more or less on low side. So we expect to keep the same production cost. From sales size, we see that mushrooms prices, excluding transport and packaging, it's important to mention, because we calculating sometimes full sales price, including packaging and transport, but excluding packaging, we are 18% higher year-on-year. What does it mean? This means that the inflation impact, it's now already incalculated in our sales prices, and we have now a new level of prices which will keep us possibility to keep margins in future. And of course, in production is quite stable. Is differencing 5% year month by month, but we always have possibilities to make it better and to improve it. And of course, management have a lot of actions to make it to perform better. But if we discuss about next half a year, so we see similar results. We can expect financial results, what we've seen in first half of the year of 2023. So if the market circumstances will stay on the situations we see and face now. So the gross profit for the segment is increased from 0.33 million losses last year to 1 million of profit of half year of this of 2023. FMCG segment. FMCG segments increased sales and revenues increased 50% year by year. So it is quite a good number, and it generated quite a good margin, gross profit of close to 1 million euros. In second quarter, the main of FMCG sales consist of regular organic products, soups, preserved vegetables, and curries, and they had 85% of total sales. And the rest you see split in small portions. And we see here already milk with 4%, which we just started with new line of more sustainable organic products. Dairy, oat flakes, and eggs we started in May, and this is we'll discuss later what we wanted to achieve with this new FMCG line. Okay, so we need to talk about why we sold AUGA factory, food processing factory, Grybai LT. Grybai LT was producing ready-to-eat soups and preserved products, which, as mentioned before, we had 85% in sales. So it's important to mention that this is business unit. This was developed in our company 6 years before we started, and we developed a successful business with generating not only gross but in net profit and EBITDA, and products were exported to 30 countries. When I first time started designing this actually processing facilities was like 8 years before. We were not any food processing company. We were a mushroom growing company and farming company. But we done this project quite well, and this is why we can sell the company and spin out this business unit for very favorable price for the company. And why we sold this company, why we not developed more. So this is because the company was sold that is not longer aligned with the group strategy. Honestly, only 80% of raw materials in these products came from AUGA farms. The rest is very important from all the world around to accomplish and to produce ready meals. So we don't want to be one extra food processor which process different kind of products. We want to be more integrated with primary farming business, where we want to produce products more sustainable way to process, and with farmers together get a value out of this. So these transactions, we received 16.3 million cash from this transaction in third quarter. And it will increase the consolidated profit by approximately 7 to 8 million in Q3. So we will be able to invest these monies in the new business areas where we see huge opportunities and growth opportunities. And this is why these transactions were made in third quarter. AUGA's new product line for consumers. So by spin-offing or selling this ready meals products, soups and ready vegetables, we launched new products which will be developed only from AUGA's produced raw materials, and AUGA's, or in future farmers which cooperate with AUGA, which works like in line with AUGA's production technology. So we launched it in May in 2023. It consists on everyday consumers food basket, dairy products, oat flakes, eggs. This is produced exclusively from organic raw materials on AUGA farms. And this is important to mention. This will be a brand and the label which consumers will vote it for sustainability, not only for organic products. And it's important because the farmers' attention and farmers' decisions to more sustainable practices need to be awarded in certain way with consumers voting in supermarkets. So these products are already available in biggest retail chains in Lithuania. In Lithuania, we don't want to grow now out of the country at the moment. We wanted to test consumers' behavior on sustainability messages. And what's important to mention that we with these products, milk products, and the main food basket products, we are in much larger category like we were in the soups and preserved products. So soups and preserved products, for example, our largest market, like in the United States, we have like a 2 billion in sales of this kind of soup products in the market, and the total grocery market is 1 trillion, close to 1 trillion. So it's the business area which we sold is very small, and where the business area which we're entering now at the moment is much larger in sales and volumes. And the most important that we would like, by implementing new standards in farming, we also will create new category in the food, which is carbon neutrality food or the no cost to nature food. Strategy implementation. So like we said before, we established a new business model, which is established by AUGA community umbrella company. So what I just wanted to remember what this every company does. So AUGA technology will identify emissions problems in the farming, will create solutions, and develop and scale technology. AUGA so far, it's a certain platform where sustainable farming standards and certifications is done. It's important to mention organizational structure for technology sharing is one of this AUGA so far activities, and know-how and digital farming management tools for farmers. So here the farmers will have possibility to get access to the AUGAs and other sustainable technologies, access to the technology to provide better food in more sustainable way. AUGA Trade will take responsibility for brand marketing, AUGA-led contract manufacturing, what we do now at the moment in Lithuania with this milk processing. So we don't have any processing facility, we contracting this facility, and we can create sales without having our own premises. So co-branding and AUGA sustainability labels. We strongly believe that big food brands, the major food brands in the world, which are committed to carbon neutrality in one day, or it's 2023, or it's 2035 or 2040, we need us, we need our solutions, we need our sustainability, science-based measured, emissions measured commodities, which we need to use to reduce these emissions. 70% of emissions coming from these food companies is coming from scope-free emissions from farming inputs materials. So without solving farming emissions, we can't solve these emissions themselves. So this is why AUGA in future will work together with big brands, with co-branding and explaining to consumers why these labels, AUGA labels, are important, why we need to vote with credit cards for this sustainability efforts of better farmers which use better technologies. Technological projects, what we're doing at the moment. So we're continuing on biomethane process in farms. So sustainable powered machinery. So AUGA M1 tractors that are on the field testing at the moment, and all the solutions are implemented in the tractors. They are double checked, exchanged if needed, and prepared for mass production. Biomethane infrastructure. 3 biomethane infrastructure objects have already been built, and we need some needed regulations update in government and in public documentations, because we will be first providers of biomethane connected to the grid, with distance connected to the grid, and this needed set and update. And we believe that it could be done till end of this year. And that's why we planned for biomethane infrastructure to connect at the end of the year. With what it will give us this production of biomethane in AUGA for cash flow situation. To current market conditions, by connecting to the gas network at full capacity, of this 3 plants can deliver, the group would generate annual profit at least of 3 million euros, according to today's market situation and today's market prices for green biomethane. Specialized feed technology, it's we test this technology in our AUGA farms. We see positive results, and we working on further developing of technology, and when technology will be ready to share, it will be separately presented. How you can finance these technological projects? So AUGA invested a lot the last 3-4 years for this R&D, for this developing to the stage we are at the moment. But of course, we can't change the industry with farming sales or farming generating cash flows. So what we're creating is not only for our company. We're creating for all the world technology which is not exist. We wanted to find technology, to implement, to test, and it will be huge impact if you can scale it. So actually, we mentioned that we wanted to raise capital in 4th quarter of this year and to apply for green different EU incentives. And what we see now, so that Lithuanian National Developing Public Organization, which is responsible for several billion projects, different projects implementation in Lithuania, we created a program for 1 billion project dedicated to green technology manufacturing companies. And by internal discussions and time schedule we are planning at the moment, the first project could be applied already 4th quarter or 1st quarter next year. So it's very soon, it's very, very, very close. And AUGA company would like to concentrate on for this application. And because this application there is no limits on the amount and sum, this is mainly a very long term financing resources, up to 30 years repayment schedules. And this is especially built to keep Europe competition in the green industry technologies, and to keep the know-how in Europe community. So this is actually perfectly fits to what AUGA does at the moment. And first of all, we would like to participate in this program, and only afterwards we will see what kind of partnership we see to implement as soon as possible this project, and what kind of partners will be needed to get on full speed the money resources which we will have applications and will be positive. So at the moment we are not validating for 4th quarter capital increase, and we will concentrate on Lithuanian National Developing Program, and here we put all the major efforts. What we've done so far on this implementing this technology sharing hubs. Like I said before, from 1st of July, we started with 11 regional cooperatives, and we moved 400 employees from our company. These cooperates will be served with free biomethane plants, which in operations, which serve the technology and the energy for the farming operations. And these hubs will be available to the 25% of the farmers can join AUGA community and to get served by more sustainable technology. So this is like a first example of sharing sustainable technology sharing principles, and it will be very common and a very good situation for our neighboring farmers to join and to change their practices from standard conventional to sustainable regenerative farming. What situation we face here in Lithuania? So we see that after in 2023, Lithuanian organic farms decreased by 18% by acreage, and the number of industrial organic farms, say it's above 200 hectares, has decreased by 30%. This is the main reason is decreasing prices, of course, for organic products, the gap you just seen before, but also the price difference of organic production compared to conventional is too low. The secondary reason is that agriculture policy before this year is focused only on greening conventional farms by providing different incentives for greening incentives and paying high money for just to change small thing in the farming everyday behaviors. And this is actually where the organic farmers we want not motivated in the new program, and that's why 30% farmers left. What does it mean? What kind of discrimination we had? So this AUGA company also we are above 200 hectares, and we had a rule that above 200 hectares, your subsidies, organic subsidies, are decreased by 30%. So this is quite substantial amount of money which our company and bigger farmers also not received, and they not earned this money which is earned by smaller farmers. And if you compare how much in this from 2015 when we moved to the organic farming till now, so this is approximately 30 million euros are kept and was not paid to AUGA company. So it's a huge amount which could be changed a lot in the farming. You can prepare better for technology change and so on. So this is actually long term, it can't be accepted. That's why bigger farmers are left. And that's why we see also that our sustainable future technologies will not see huge demand if we keep it only on organic technology, because shrinking farmers market, it also shrinks our future possibility to cooperate with the farmers. And one thing. Second thing that about agriculture policy, that after this we see now big dumping in the farming area. We expected that the farmers will increase till 13%, and now we could decrease to 8%. So we reduce it now. We are proposing now for next year already that we not use this cap in future anymore, and they increase a little bit organic subsidies. These discussions already on table on government bodies. What does it mean in future for next year? So this for next year, even if we stay with 60-70% of farmland in organic for next year, so the subsidies amount still will be 1 million euro more, even by reduced acreage. So honestly, these certain kind of actions we need to do before the farmers are leaving the business, and now for them, the government bodies to keep it farmers left, this will be not so easy. So, but AUGA's new business model is based on application of technology and sustainable farming standards for a franchise principle farming community. So we still believe that, and this most important, that what we develop for biomethane cycles, feed technology, these technologies are available for both farming principles, conventional and organic too. So what we've done and what decisions are made. AUGA made decision partial diversification into a regenerative conventional farming. we made decision to convert up to approximately one third of our arable land to conventional regenerative farming. How it will be, what opportunities are out of our change? First of all, we can scale AUGA technologies and sustainable farming standard in conventional farms too. So this means that 92% of our neighbors could be applicators for our technology versus 8% of existing farms. Also, we can supply our more sustainable raw materials to food producers in larger markets than before. So the big corporates and big brands, we produce maybe 5, 7, 8% of all the products lines in organic standards. The rest is produced by conventional standards. So it could be not easy if you stay in organic to fulfill the requirements of this 92% market share. So because organic standards requires much more limitations, and this will be always more expensive to produce if you compare the standard conventional practices. So, and not especially every food brand would like to have organic. So we are good with sustainable, conventional or regenerative standard. That's why big corporates already establishing requirements for future farmers and regenerative farming practices we would like to see from the farmer side. But not that we are pushing farmers towards organic practices. We're keeping on the conventional ones. So also we'll have a much bigger impact to reduce emissions, because we can across the entire agriculture sector, not only on organic. And we also calculate that maybe it's for a period of time, our emissions a bit will increase, but per kilogram of production, per kilogram of ton of production, it definitely we expect that will be decrease with AUGA's practices, what we are planning for next coming years. The diversification and the change one third of our farms to conventional ones benefit to financial flows as well. First of all, is diversifying sales channels and markets. At the moment, we work only on one organic market. If this market has 10-15% too much products at the moment, so you can't do on different markets. So, and this is fluctuation in the markets depend year by year, and that's by adding extra conventional products. We will be less fluctuation. We will have less fluctuation. And second, revenue from conventional production enters the cash flow more rapidly. What does it mean? So organic standard, what we are producing at the moment, we need to harvest and keep in our storages and deliver to our consumers, which are mainly consumers in Europe, till next harvest. So if the consumption in Europe is a little bit less, so we need to wait before we'll open the sales opportunities. So we need to wait with full packs of our storage, and this increase our, of course, working capital needs. Within conventional business, close to 30-40% of conventional crops from Lithuania sold directly after harvest, and this normal business practice. And actually, in this practice, we can sell immediately after harvest our conventional products and stay with organic products and wait for the best offers till next harvest. It will be more cash flow, more adopted to the company expenditures. So adjusted working capital, which is approximately the AUGA's quarter by quarter is a little bit different, but it's approximately 40 million. And in the end of 2024, could be substantially reduced. I think it could be reduced 10-15 million euros. This reducing of working capital it's directly response to extra 15 million euros in the positive cash flow, and company can use it for deleveraging or paying out part of our debts, and to keep projects and the investments which we planned before in line. And moreover, additional 5 million euro EBITDA will be generated from if you evaluating based of today market conditions. So from this one third of our soil conversion to the organic, from organic to conventional, so we would generate 5 million euros EBITDA more if we will be on today's situations. Of course, the situations a little bit changed if the subsidies for organic farmers will be higher, so it will be the difference will be smaller. But what we see now, so it's definitely the margins and the incentives from organic business area is a little bit too low to keep all the 100% of our soils in organic standard. Another important thing is that to convert 1/3 of necessary of land, we don't need extra huge major investments to make it, because this company before we had already conventional technology, and we have all the needed necessary machines to provide on regular standard basis. Of course, in future, we would like to invest in more sustainable technologies with precision sprayers, precision drills, precision fertilizers applications. But it's also what is good also to mention that efficiency and sustainability in conventional farming is not against each other. So in most of the cases, saving fertilizers is also saves also emissions, and this is why it's a lot of area to do here, and it's also that it's good that we can to get the knowledges before our technologies will be developed, and try and to test this technology and to apply the farmers when we already have implemented this technology in our companies already. The share price, this is just statistic information from the first half of the year, and this is nothing to comment. So more information you can find here, and you can ask your questions and send the letters to Arminas Kęstutis, who is in charge now of head of finance department of AUGA Group, and he will comment you of your needed request to your questions. Disclaimers, and AUGA definitely will become synonym for sustainable food and lifestyle. So thank you very much.
Thank you, Kęstutis, for the very comprehensive presentation. Now we will proceed with the questions. Before that, I would like to remind you that you can submit them in the question box at the bottom of your screen. So the first couple of questions were received in advance, and I'll start with the first one. What about the estimated harvest in 2023? Could you share any indications yet? What about the commodity prices? Could we expect the change in the current trend?
Okay, so what about the harvest? To say the harvest for the year 23 will be averages, will be not good, not bad. But we don't see, like I said before in the presentation, no signal that yield adjustments that will be falling down because of volumes will not harvest. Of course, there are still 3 major crops we are not yet harvested, and sugar beets, beans, soya. This is which will have substantial part in our portfolio, and is still finalizing about wheat, with summer wheat. So, but regarding the commodity prices, like I said before, we reached, my opinion, especially in wheat, we reached the moment when there's no sense for producers to sell. It's better to wait, because the prices are very close to conventional. So you can always sell organic commodities to conventional markets, but you never can sell commodity or conventional to organic markets. So this is, and of course, like I said before, partially some of the growers left organic market already. So like 30% of largest producer Lithuania, we are not on anymore already on market. So we are not will have from supply side, and yeah. So this is my answer.
Thank you for the answer. How much of the FMCG revenues do you expect to decline in the second half of this year compared to the first half of this year?
Okay, so we cannot predict specific numbers, but the new product line with no cost to nature. This is from main food basket, especially from dairy food basket, will partially compensate for the segment losses due to the sale of Grybai LT. It's important to note that the Grybai LT business was developed for 6 years. So we do not expect the new product line to immediately perform at the same level as before in these volumes of the sales. And it's important to mention, but on the starting, even Grybai LT was not a cash generating segment. It was including the marketing expenditures, even generating negative cash flows. So this is what they expect, but very important to mention that we work in completely different market size, because soups category, for example, and milk category is several times more, so 20 times more. So this is if we find the place in the hearts of consumers regarding sustainability, our messages, so it can convert times more in the revenues compared with Grybai LT sales.
Thank you for the answer. Let's move on to the next question. Could you comment on the operating expenses? Why are marketing expenses this high year on year?
Okay, so it's, mainly I will, this is the jump in the first half of the year. It was related mainly to introduction of this new product line, which we need to make introductory step in the market and explain consumer what does it mean AUGA brand, what does it mean AUGA new claim, no cost to nature, and all the activities related to this. Of course, operating costs were increased by employees, salaries, marketing expenditures. And it's important to mention also that in future, we will exclude also sales of Grybai LT, but it will exclude a lot of marketing expenditures related with sales of these preserves and processed markets. And if we plan for the second half of the year, we need to exclude also some marketing expenditures which were related with Grybai LT, and we expect that the second half of the year will be market expenditures lower comparing with 2022, second part of 2022.
Thank you for the answer. And the next question is, could you elaborate on debt maturity and interest costs split between fixed and variable rates?
Debt maturity is extended. Green bonds maturity is next year, end of the year. In the first half of 2023, fixed rates interest costs were 37% of all interest costs, and variable rates interest costs amounted to 63%, 1/3 to 2/3 of our debts. And when we're discussing about maturity, so we see that, yeah, so renewing our how to say, the bonds, it probably will cost a little bit higher margin versus we raised in 4 years before. But we will see it, then we will make next spring. We start validating their repayment and of how to repay the bonds. And here we will see market indication when we can publicly announce what kind of range will be for refinancing these debts.
Thank you for the answer. And the next question is, could you provide some insight on green program from the European Union? Have you already applied for the program?
This program is not yet. This is not yet available. This is at the moment Lithuanian government applied to Europe Commission for confirmation the program before it could be applicators can apply, and we preparing now all the necessary, how to say, documentation for applicators. And like I said before in presentation, it could be a fourth quarter of this year or first quarter of next year, then we exactly will know what will be regulations, what does our company will fit for these regulations. But what we see, what we hear from the bodies which are arranging now this documentation, that this is AUGA's activity very, very well fits in this R&D activity, what we develop a stage where we are at the moment very, very fits towards requirements of the future program.
Thank you for the answer. And the next question is, do you have any preliminary results of the execution of the new strategy plan of the company presented in May? For example, new innovations, some update on biomethane tractors.
Actually, I presented it already in presentation. I more or less explained already what stage we are already at the moment, and I don't think it's needed to repeat it because it's answered already in presentation.
Okay, let's move on to the next one, which is the last question of this session. So if you still have any questions, so please do not hesitate and submit them in the question box. So the last question, what was the price which you used for wheat when evaluating Q2 POH, and what is the current wheat price in the market?
Actually, AUGA never disclose specific prices we sell on our market. This is because it's good to have here. This is for also to the market, not open arms with the customers to play on this everyday changes. So, but the wheat prices we used for first half of POH calculations are more or less the same at the current market prices. So the prices are not dipping down, so we are more or less stable. If we discuss about wheat, so I can say that the wheat price is related to the quality, because quality in organic is the first and the price is the first, but it's starting from 20 till 40 euros or 20 till 50, let's say, euros more on the conventional one prices. So it's one of the lowest price, how to say, premiums historical in AUGA's company history.
Thank you for the answer. So this was the last question so far. If you haven't sent your question yet, please do it now. But as all of the questions are answered, on behalf of AUGA Group and Nasdaq Vilnius, thank you everyone. It was a pleasure being with you today. The recording of this presentation will be available in the company's website and the Nasdaq Baltic YouTube channel. So, Kęstutis, thank you for the very informative conference, and have a great day. Goodbye.
Thank you very much, and thank you for questions. Have a nice day.